Hello, good afternoon. You're watching Closing Bell with me. Welcome to Moneycontrol's live stream. You're watching Closing Bell with me, Lavish Hadarad, and my colleague Yatin Mota. Well, quite a roller coaster ride for the markets today, Yatin. But yes, fifth straight day of gains. Bulls are roaring. Sensex and Nifty, both of them gained about 1% each. We saw Sensex settling above that 81,700 levels, as well as Nifty settling above that 25 odd levels. But yes, a volatile session. India VIX also spiked up to 5% in the initial part of the day, but the second half was quite a good session, and from India VIX 15 odd levels, it did settle to that 14 odd levels. Off to a positive and a strong December series start. Majority of the sectors saw buying in today's trade. Nifty IT index, that was the star performer of today. It hit an all-time high. So yes, quite a strong start for the December series. Yadin, what are you making of it?
So yes, it was a volatile trading session. In fact, at one point in time, we were 400 points up on the Nifty, ended only 250 points higher. So almost 150 points shaven from the day's high. However, if you look at the intraday volatility, that was more than 500 points for today. Mid and small cap indices, quiet session for them, 0.5% kind of a gains coming in for mid and small cap index. So it was largely an index move, not a stock specific or a secular bull market today. And probably the reason why, despite a 250 points plus rally on close for Dalal Street, we only had advanced decline ratio, which was 1:1. Among sectors, IT, financial services, auto sectors did well. But I think ahead of the rate cut policy, which the market is probably anticipating that there could be some rate cuts or probably some adjustment to CRR, markets are on wait and watch mode. Let's see what the RBI has in store for us tomorrow. Especially given the fact that the anticipation of the market now is a 25 basis points CRR cut at least.
That's right. If you look at some of the top Nifty 50 gainers and losers at this point of time, a lot of majority of the IT stocks participated well in today's trade. Among the top Nifty 50 gainers include the likes of TCS and Infosys. Both of them rose about 2% each in today's trade. Titan, Trend, Dr. Reddy Labs, all of them doing well in today's session as well. Titan, of course, up about 2% in today's trading session ahead of the wedding season. We have the onset of the wedding season coming in, so a good buying scene for plenty of jewelry stocks as well. Well, on the losers end of the markets, we can see the likes of SBI Life, which is down about 1%. Bajaj Auto extending from yesterday's decline, down about 1% as well. HDFC Life, NTPC, and Grasim, all of them not doing well, and on the Nifty 50 losers pack as well. But broader indices performed well. It did outperform benchmarks in the first half of the session, but of course in the later half, and right now it's settled about with about a marginal set of gains. Small caps about 0.1% up, and mid caps, however, 0.2% up. But of course, 10th straight day of gains. Yatin, what are you making of the broader end of the markets at this point of time?
So today, a lot of brokerage stocks and exchange stocks were in focus, especially the likes of BSE, new FNO entrant CDSL as well. Both of these stocks did well. In fact, BSE after opening firm ended the day higher by nearly 14%. So good moves coming in there. We also had stocks like Maharashtra Seamless and KPIL gaining anywhere between 7 to 10%. Brokerage stocks like Angel One and Motilal Oswal also did well. What was not doing well is Idea. Some bit of profit taking there. Stock 4% down. Amber Enterprises, Oil India, as well as stocks like Divi's Lab continue to remain under pressure. We also had stocks like Adani Green and Fortis witnessing some bit of profit taking when it comes to the markets. But stocks like Anand Rathi, K Fintech, Zomato continue to hit fresh 52-week highs, and all of these stocks up anywhere between 3 to 5%.
That's right. Let's break down and move on with the next segment, that is about what the stocks were in focus on the Dalal Street today. Well, the first, of course, is the IT stocks that was largely which led the rally in today's session. Nifty IT, of course, as we mentioned, it did hit new all-time highs. We saw the likes of TCS, Infosys, HCL Tech, Wipro all rose up to 1% and up to 2% in today's trading session. Of course, some of the top Nifty 50 gainers as well. So this is the fourth straight day of rally for the Nifty IT index. Today's rally also came on the back of Fed Chair's Jerome Powell's comments, where he has indicated that the US economy is stronger than expected when in September it had initiated the rate cut path. He said that he could afford to be a little more cautious when it comes to the future of the rate cut path. Some signaling towards easing could be on the annual as well. Now, the U.S. Fed will be conducting its two-day policy meeting this month in on September on December 17 to 18, and about 70% of the market participants, they are pricing in for the Fed to rate cuts by another 25 basis points this time. That's what the CME Fed Watch tool has been indicating as well. So a third set of rate cut could be on the anvil. And any rate cut, we have known that for the IT companies helps them to borrow more at the lower rates, and thereby we could see a pickup in the discretionary spending as well. Apart from that, BOFA also came out with a report saying that they see more legs to the BFSI recovery, a vertical that has been lagging in the past 2 quarters. So there could be some recovery on the BFSI part of the vertical of IT. Cloud spends too, they believe, will make a comeback. So quite a positive commentary coming in for the IT stocks, and it has been rallying last month as well after the Trump made comeback as well. Yet in fourth straight day of gains, even after Trump's victory and strengthening case of the US dollar, looks like, IT would lead the market rally going ahead.
And probably, yes, we have the CNX IT index at all-time high, and probably after the lean December period, we could see some pickup when it comes to execution for the Jan-Feb-March quarter. And there is some sense of stability in the US after the thumping majority Trump got. A lot of corporates are expected to make decisions, higher discretionary spends, and the Trump administration has already indicated that they will look at a corporate tax cut. And if that happens, that extra dollars which are saved in terms of lower taxes probably go into upgrading your IT infrastructure. Apart from that, I think a lot of Indian IT companies last quarter when I spoke to them were talking about the huge potential of artificial intelligence and the projects that they are undertaking already. That could also be a growth lever for the next financial year. But yes, on an overall basis, most of these IT companies are trading on a healthy pitch.
That's right. Let's take another stock in focus, which was your Indraprastha Gas. That stock surged about 7% in today's trading session because the board plans to consider bonus issue plan next week. Now, this will be the first instance that the company will be declaring a free share issue for its shareholders as well. Neither of its peers, like Mahanagar Gas or even Gujarat Gas, have earlier issued bonuses to their shareholders yet. Now, the board meet for the IGL comes on the back of the sharp correction that the stock has seen in its price. That is, the stock is down over 35% from its recent peak of 570 rupees. Yet in last month, IGL that had announced a 20% reduction in the domestic gas allocation, following which the stock had also seen a significant correction. It saw it did hit a 52-week low. Do you expect this bonus issue plan to allay some of the investor concerns going ahead?
I think bonus issue are generally book entries, and they probably cheer the stock prices for 1 or 2 days. But then I think markets are slaves of earnings. When it comes to IGL, there has been a big issue with the Delhi government because they are looking to convert the entire taxi fleet into electric vehicles. Shifting from gas based fuel to electric fuel. Most importantly, we also have the APM gas allocation, which has been recently cut by the central government, which is increasing cost for the city gas distribution companies. IGL, obviously, they are looking at various new projects, but I think with gas inclusion in GST, probably with rationalization in gas prices, because most of these gas companies are increasing prices by 2-3 rupees. Another 2-3 rupees would probably support the earnings. Given the fact that the APM allocation has been reduced, increasing cost, and higher spot rates are clearly impacting margins. So these stocks have typically derated, but yes, for here to get back to old levels is something which the time will only tell, because volumes as well as pricing is something that the market will be watching out for when it comes to the gas distribution business for IGL.
That's right. Let's move on to another stock in focus. That is your Indus Towers. Well, the stock surged about 7% in today's trade. We saw about 8 crore shares, which comprises of about 3% equity, change hands in a block deal. Now, while the parties involved in the transaction were not disclosed today because the deal comes a day after, but the report suggested that the UK Vodafone Group PLC that announced that it would sell remaining of its 3% stake in Indus Towers. Now, this marks a complete exit from the Indian Towers firm as well. Now, Vodafone's decision to sell its stake in Indus Towers has been driven by persistent pressure from its lenders to repay loans which are secured against its Indian assets as well. And a group of foreign banks, which include the likes of BNP Paribas, HSBC, and Bank of America, they have demanded full repayment of the borrowings. So, Indus Tower, what they believe that the proceeds from the block deal are expected to be primarily used to repay the $101 million borrowings, which is secured against Vodafone's Indian assets as well. On the other hand, the residual funds of about 1900 to 2000 crore rupees, that is likely to be infused into Vodafone Idea as an equity. That's what has been pointed out by the brokerage firm Citi as well. So this equity infusion, that would help Vodafone Idea clear its outstanding dues to Indus Towers under their master services agreement plan. Citi has given a buy rating on the counter on Indus Towers and has given out a target price of 458 rupees as well. The brokerage firm has said that the residual funds from Vodafone's exit could translate to about 7 rupees per share in additional payouts to shareholders as well. So yes, quite a bit of an optimism coming in for Indus Towers. Yet, in majority of the optimism that came out today was because the investor is expecting that a special dividend payout would be given to them after we cleared its dues. The brokerages estimate about like 7 rupees on an average of a special dividend. What do you make of it?
So I think there is a possibility that the dues gets cleared for Indus Tower, and not only that, this marks the complete exit of Vodafone PLC stake in Indus Tower, making it a fully owned, company when it comes to the Bharti Group. Yes, there are expectations that from here on dividend yields will improve. The dues from Vodafone will get regularized, and probably the reason why the stock rallied ahead of the block deal as well. Moving from telecom to pharma and Divi's Lab, this was one stock which was in focus. The shares dipped almost 5% on intraday basis, making it the top FNO loser. The stock settled, however, 2.5% lower on the back of the news that Novartis lost appeals court lawsuit, which tried to block, one of their competitors, Blockbuster hard drugs Entresto launches. Now, MSN Pharma was to launch the blockbuster hard drug, and this might impact Novartis's launch plans, because right now, this is one drug which has exclusivity, higher revenues visibility for Novartis, but with setback coming in from the appeals court, this would mean lower business for Divi's. Why? Because Divi's is one of the top API suppliers to Novartis with respect to this hard drug, and nearly 10 to 15% EBITDA and earnings might get impacted if there are lower volumes from the Entresto drug, which is a hard drug. Now, if you talk about the analyst community, they were already finding some bit of hiccups because of the court order, which also came earlier. And now with the appeals courts also rejecting and generic competition coming in the next 6 months, the earnings for Divi's Laboratories could not be as great as it was anticipated earlier, and hence the stock correction today. Obviously, the stock exchanges, Divi's Lab said that they cannot comment on the appeals court decision. However, this decision will not have a material impact on the business of Divi's Laboratories, as it's between Novartis as well as MSN Pharma. But analysts do believe that there could be some immediate earnings effect versus the previous expectations with respect to the revenues that could come for Divi's with respect to the supplies of API to Entresto.
All right. Okay, all right. So with that, we have come to an end of this edition of the Closing Bell. Tomorrow we have the RBI policy outcome. While the street does estimate that there would be no change to the repo rate cuts, but we will be watching out if there is any announcements on the liquidity front. But for now, it's a wrap from Yatin and me. Thank you for watching. Stay tuned to moneycontrol.com for all the news updates and market insights.